All right, guys, we got trader Zack joining us today. Another day trader, does a little bit of swing trading style. So best questions for him, starting in a minute and a half. All right, guys. Cool. Okay, perfect. Okay, cool. We got trader Zack today. Just met the guy. He's friends with James Bruce here. And I guess you guys have been trading together. And we were just quickly chatting right before the stream. He says, you know, he's got a strategy that after he gets paid out from prop firms, he likes to take it lightly so that he doesn't go on tilt. Market currently dumping.
Yeah,
So,
wow.
yeah, let me just, I think it's actually just filled a couple.
I actually caught some shorts on NQ today with Hunter.
Oh, wow. Yeah, it's moving really fast right now.
Yeah.
Really hard drop right now. Cool. As we hopefully try not to panic here, Zack, break us down your trading style.
Hey guys, yeah, thanks for having me. Just wanted to mention, shout out South Africa. I mean, James Bruce has been a good trading buddy of mine for some time, and he was actually the one that taught me that, you know, the moment you get a nice, decent payout from a prop firm is to kind of tone down the risk for the following week. Sometimes when we're overconfident, we tend to, you know, make mistakes, and that leads us to go on tilt a bit heavier than what we would have liked. So in terms of my trading style, you know, I'm trading session open, I'm trading with volume, with momentum, ideally in alignment with the last 1 or 2 days worth of flow. And I'm trading European markets into London Open, you know, so pound dollar, euro dollar, DAX are my kind of go-tos. If I'm flat for the day, you know, I don't mind looking at the US market open and paying attention to things like SPX or NASDAQ. Those are kind of my go-to. In terms of strategy, pretty basic. I'm looking for clear structure, break, retest off of key levels. We call it value area, where there's just alignment of key levels. So things like VWAP, EMA as a dynamic, and then session highs, lows, you know, overnight highs, overnight lows, daily highs, lows are the key levels I like to trade off of, yeah. So just keeping it simple and looking for areas of confluence to get positioned.
Yeah, maybe let's just pull up the chart actually right now.
Yeah. Hunter, I actually went to a trading conference the other day in Cape Town, and Zack and I met up. He lives on the other opposite end of South Africa. He lives in Cape Town.
Oh, right on. I'm having issues loading this up here. 1 second.
James lives on the rich side.
Aha.
My trading view doesn't want to share today, actually. So maybe I'll just do the whole screen here. Share the whole screen. Okay, cool. I've actually entered a long just off this level here. Exactly what you were saying off of the key daily levels, right? Like we've got this previous day's high and probably looking at some sort of bounce in that zone for the NASDAQ. Is that kind of a similar sort of style you'd be trading to? Are you picking up anything on the NASDAQ right now, Zack?
Yeah, let me just drag out the NASDAQ here. I think first thing I'd be paying attention to is that run above previous daily high. So, I mean, we have been bullish. It looks like the last couple of days. We had a sell-off from last week, Friday, but just dragging it out from like Wednesday. I mean, we have been, fairly bullish. So if I just see from today's price action, London session, we did get that drive higher and then fading past previous day high quite aggressively. So I think maybe pre-New York, maybe just off the open, trying to get short of the highs there for a reversal idea. Yeah. Could have been potential. At the moment, I mean, we're just dumping pretty aggressively. So I've never been a fan of catching a falling knife. So usually in these situations, I'd most likely just stay flat, see if price stabilizes, see if we get a correction, and then try and trade that continuation.
Yeah, this is not a good idea to be in this trade. So I'm actually going to be probably closing that out immediately here. $100 loss on my account right there immediately.
Sure. You're still running that challenge, Hunter?
Yeah, we're still sitting probably, I think, well, now after I think just took a couple losses this morning, we're sitting at probably 12%.
Okay.
Which is, it's not, we're coming back down now that we're coming into October. But that's all right. Anywhere between 5 and 10% per month is, I think, the sweet spot. I think a lot of traders try to shoot for much more than that. And then you end up gambling. You end up,
trying to end it.
Getting these kind of false expectations, right? And a good chance you see some sort of bounce here. But exactly what you're saying is, generally you want to look for, even just a small reaction off of these lower time frames, and you're not seeing that in the slightest here, right? So you can see, hey, I'm going to draw a level here, right? Exactly what you said, the key area, right, that we'd be looking for. I picked up a long there. I picked up a long a little bit earlier. Both of them dumped through, right? I picked up a long here, right, and then closed it out. Another long here. But usually you want to see, some sort of reaction, and even the 1 minute didn't even see anything, right? So most likely is this is going to convert to resistance now, right? That's support trend resistance sort of thing, right? We'll see if the 15 can close back above it, so we can potentially get back in. But exactly what you're saying is, a good trader manages drawdown, and when you're catching your falling knives, those drawdown potentials are really high. Now, unfortunately, it looks like I might have closed the exact bottom. That's amazing, but but we'll see how these candles close, and then we can go from there. James, how's your trading today?
Yeah, I had actually 2 nice shorts. I actually shorted YM. Do you want me to share my screen?
Oh shoot, I actually didn't even share the screen. I forgot to put it here.
Yeah, but I shorted YM at 968 and I was out at 850. And then NQ, I was in on the shorts at the opening range low break at pretty choppy, and then I got in at about 196, and then I shorted back down, for about 50 points. So that was my trades today.
Nice, you did the good.
Yeah, and then yesterday I had some small wins to the long side. I hate those like slow grinding days. I don't know about you, Zach. In terms of like your trading, like those slow grinding days can be pretty annoying at times.
Yeah. I think those are the days you try and either prevent yourself from putting on risk or staying flat in general. I've just noticed trying to follow a bit of macro and what's happening around the world. I mean, we're in quite interesting times at the moment where we're seeing a lot of correlation between gold and Bitcoin, which is quite ironic. I mean, we've had gold being predominantly the safe haven assets, and then we've had Bitcoin being the more risk on assets. But seeing them both rally simultaneously kind of makes me think like investors are starting to lose trust and faith in traditional currency, so I think over the next couple of weeks we're going to see a lot of volume, or at least erratic movement, especially in the currency space. I know you guys are more futures indices, but as for myself, I mean, we've had some erratic moves on the currency space. I mean, pound yen, pound dollar, euro dollar, all gapping up off the open this week. So we've been getting a lot of erratic moves, strong swings, where we get maybe like a good 60 pip move on a day, and then fully retracing to back to mean reversion before extending. So I mean, pretty volatile, at least from the currency side. So you definitely want to stay flat, I think. But as day traders, we do thrive on volume, so I'll just be staying selective and staying patient. The days that do range, trying not to get caught up in the range, and just managing my size accordingly. I think just having those risk parameters in place at all times, just having those max daily risks, those max daily stops, and trying not to deviate from the plan. The market cycles change, but yeah.
I think Hunter, so Zack's actually quite a good guy to speak to in terms of trading both prop firms and personal cash accounts, because actually Zack trades mainly personal cash himself. Zack, what are your thoughts on prop firms versus personal cash accounts? Why do you favor your own account mainly over prop firms?
Yeah. Look, I think especially in South Africa, you have to be super cautious when it comes to the brokerages, exchanges, whether it be crypto, FX, prop firms. We've had the rise of prop firms in South Africa, and you know how that's been, James. But comparing it to even the off or overseas accounts compared to, like, for example, we use a brokerage, HFM. I think the daily withdrawals, and now it's been so competitive. We're getting like instant withdrawals at the moment, 2 minutes into the bank account. So I think as a day trader, you don't want to wait weeks for a payout. So sometimes being able to hit a trade on London and pay yourself to go for lunch on the same day has always been quite beneficial. So that's kind of cool, especially things like tight spreads. Having zero spreads, instant withdrawals. Those are things you don't really find on funded accounts. But I do believe that that capital is one of the biggest bottlenecks for any day trader, and especially when you're scaling and you don't maybe have other businesses and you're not cash heavy. Capital is massive. We all want to scale as a day trader. We all want to size up. We want to trade heavier, but to trade better and to trade bigger doesn't mean more risk. It just means more capital. So that's where we have to leverage the prop firms. And then the prop firms itself has been, quite a massive competitive space. We started off with FTMO having to attain 10% in a couple of days, and then having your max daily risk. Now it's like you can just pass a challenge, take your time with it. It's like unlimited time. Most of them are like upwards of 15% max drawdown now. So it's quite easy to pass funded accounts. I think for myself personally, I've just caught myself deviating from my strategy and deviating from my plan, trying to pass an account, because at the end of the day, I think Hunter was correct. 5 to 10% you can average, you're doing quite well. I think even 2-3% per month, you're doing excellent. So to pass a challenge these days, doing 10% can sometimes be out of my risk parameters. So having to step on gas and definitely using challenges and trading challenges a lot differently to private accounts. But I've been loving the way James has been going. I don't want to spend 2-3 months trying to pass a challenge. I'm also here to make money. So just trying to find a good process to mirror private cap with your funded account. And then even just trying to enjoy these instant funded accounts. Like, it's not as easy as said than done. Instant funded accounts, you still need to know how to trade. They're rewarding and they're giving payouts to guys who are consistently profitable. You have to have that profit rule. So you can't just get lucky, bang a good trade and get a payout. Like, you actually have to trade consistently to get a payout. But if you're a good trader, you back yourself as a trader, why wait 3 months to pass a funded account? Just get yourself an instant funded, get that payout. And then it's also important, what are you doing with the payout? Reinvesting it back into more prop firm accounts, reinvesting it back into longer term portfolios, back into your private cap, etc.
You said something interesting that I rather strongly disagree with. You said 2 to 3% is pretty good, right? And it's a tricky number because 2 to 3% per month, it really does snowball, and that's amazing to make profits. But in my opinion, coming from the crypto space originally, like, Bitcoin soars, right? And on average over the past 5-6 years, Bitcoin's made, I think, 4% per month, right? So if you're shooting for that 2-3% per month, you might as well just go get a day job and hold Bitcoin. This is kind of my opinion, right? Do something in the trading space, at least, still you can still be somewhat trading, and then be doing these positional based trades where you're just holding the upswings, and then you can actually even get even more than that sometimes. That's why I say 5 to 10%, because then you're completely outperforming the market. Now, the one thing where my theory disconnects is with prop firms, because prop firms are more of a day trading sort of thing. and you're getting all this excess capital that you wouldn't have been able to get in your personal account. So 2-3% on a prop firm, if it's that instant funding account, or it's already a funded account, you can make crazy amounts of money, right? Because you've already got that capital injection, right? But on a personal account, I would be shooting for 5 to 10% personally.
Yeah, no, I hear you. I think you can play them both, vice versa. I mean, I could probably meet you at the middle somewhere. In terms of like comparing it to BTC, I think it's good to have a diversified portfolio in any case. You can hedge yourself against different markets. You can prevent yourself against different turmoils. Of course, I think as a day trader, at least from me, I'm paying bills. It's not my only stream of income, but I like to try and keep it consistent and keep my risk managed at all times. So, for example, BTC, I completely agree. I mean, if you held BTC from the dawn of time, you'd probably average, 4% a month and outperform majority of the markets. But at the same time, you're going to be sitting through those volatile swings. You're going to be sitting through 6 months of consolidation. You're going to be sitting through 2021, you're going to be sitting through a year and a half worth of drawdown, so it comes with its benefits and doubts. But I think as a day trader, if you're trading on 100, 200K accounts, and maybe you've got 5 of those accounts, you're getting a payout on each per month. That's significant. I mean, that's a decent salary you can pay yourself. And even with that excess, the excess capital, to reinvest that back into outperformers, like you said, BTC, having a fair chunk of BTC, having a fair chunk of alts, dollar cost averaging the S&P 500, that's a decent retirement pot you got there.
Yeah,
for sure.
Are you an instant funding type of guy?
I've been trying the instant funded. So I got my first payout on Top One that James recommended. It's my first and only payout. I'm going to reinvest in that. That is a 50K account. So I was just giving it a go. Yeah. Took about 35 days. And I can actually draw it up on my side here. We use a platform called Trade Nexus. We actually developed it itself. Another bottleneck besides capital is actually journaling. Journaling is a massive bottleneck for day traders. I feel like most people are spending 90% of their time actually journaling the trade and 10% of the time reviewing what they journaled, whereas they should have it vice versa. They should be spending 90% of their time reviewing the actual data and 10% of the time journaling. Journaling becomes super tedious, especially if you're on a losing streak. The last thing you want to do is start, journaling about how much money you lost.
Yeah.
But sure. Trade Nexus has been something we've been developing for some time. I'm not too sure. Am I allowed to share screen here?
Yeah, you can share screen, a little up arrow on the share there, and then I'll put it on.
Okay, cool. I'll just be a minute, and I'll kind of give you a rundown on how
ready? I want me to put it on?
Yep.
Okay, there you go.
Cool. You guys can see, right?
Yeah.
Cool. So, I mean, this is a Trade Nexus. This was actually the Top One account that I managed to get a payout on. As you can see, pretty steady growth. But I think what's important here is the data that it's showing you. So you can see a pretty steady equity curve, but a fairly low win rate. And bear in mind, this win rate is actually probably a bit lower. Just to kind of pass that consistency rule, I had to kind of scalp the last $1 or $2 towards the end. So I would actually say this is around 47%. So I think a lot of day traders, they're focusing on win rate. They're judging themselves based on if they're winning because they get this gambling mentality that they win. Whereas for my side, I'm actually just focusing on how little I can lose because the win rate's not too important. But if I can focus on data like, for example, my average holding time, I can see on average how long I'm holding trades, my losers, I'm cutting them quickly, decent profit factor. I can then come down over here and then see, which best pairs I've been trading. As you can see, European markets have been doing it for me. So pound dollar, DAX, euro dollar have kind of been my sweet spot at the moment. As cycles change, I'm more than happy to adapt, but I'd rather be a master of one than a jack of all trades, as the guys kind of say, and then trading majority into London Open there. So if I go trade log, you can kind of check in terms of how I'm journaling and how I kind of review positions, whereby all I really do is I'm focusing on obviously reflective emotional state. Not just journaling, hey, like date, time, pair,
I love that.
Screenshot.
Emotions are such an underrated,
Yeah.
part of trading.
Yeah, for sure. For sure. I think everybody journals maybe the less attractive things, they journal how much money they made or, how the trade setup looked. But I think reflective emotional state, something that really helped me was I used to just back in the day, as you get a little bit more experience, you become more mindful, being mindful of your emotions is massive. But journaling how I'm feeling before I put a position on, how I'm feeling when I'm in a position, how I'm feeling when price goes up 1R and then goes back to break even, how I'm feeling when price goes drawdown 0.5R and then goes back into profit. These are reflective emotional states that we need to become super mindful of. And the more you journal that's the data that I'm really focused on. And the P&L just comes in. The P&L comes with good process. But if I can get a hold of how I'm feeling and my emotion, because emotions are part of the human psyche, we can't remove it, but we can become friends with it and not try and suppress it, because I think sometimes we suppress it. And as I said, we end up going on tilt. So journaling has been massive for me. So
that is one of the most important things I like to talk about as well is, recognizing that, hey, I'm trying to cover this loss that I just had, or, hey, if I wake up, I noticed something funny, actually. If I have fast food the night before, the next day I trade terribly, right? Because I'm not sleeping well. I wake up more tired and exhausted, and then I don't look at the chart properly, and then I make some assumptions trying to make money, right? Rather than actually playing the game properly, it's you're just jumping on the chart mindlessly, right? And without actually analyzing how you're feeling and being aware that, hey, maybe that McDonald's burger wasn't a great idea last night, and now I'm feeling stressed out because I woke up late. You know what I mean? Because I had to sleep in. Because you know what I'm saying? These things start to snowball. Anything in life can make you go on tilt, and it's not the one day of you losing $100 that ruins a trader. It's it's you losing $100 and then it turning into 1,000, right?
Yeah, for sure. I think even having a glass of wine. I mean, a lot of the guys studying the guys on Wall Street, S&B Capital, Brett Steenbarger and Shark and all of these guys. I mean, they got like these aura rings, and they start tracking REM sleep, and they can start tracking how deep they sleep, and that has a direct correlation to their performance. So if they wake up and their sleep wasn't good, I mean, they're not going to look at the charts. So tracking data is massive, but I think everybody's tracking the wrong data.
Yeah, totally. So I got a nice question here for you. Zach, what's the process for identifying a market phase has shifted, and how do you adapt, when it shifts?
Yeah, no, that's a cool question. I think it would differ depending on portfolio. I think from a day trading standpoint, majority of the time we're obviously flat. With day trading, flat 95% of the time. So before I even put risk on, I need to make sure that we're trending. I need to make sure what environment we're in, and when it comes to like picking different market environments, as James said, if you've got an understanding of a bit of broad macro, you can kind of basic technical analysis, trading in between daily highs, lows, and you can gauge price action, and you can gauge when we're in a range. Then it's pretty easy. I think price action kind of shows everything. So, I mean, as for myself, the question was, how do I gauge what conditions we're in? What is the question, right?
Yeah, basically like the changing market conditions. Because you had talked, I think this was a little bit earlier question. You had talked a little bit about, as the sentiment for different pairs change, with you saying the currency pairs have been quite volatile right now. How do you identify that?
Yeah, that's good. That's a good question. I think between utilizing price action, I mean, we've also got a software that we use, at Edgeful. You can see the average daily ranges on moves. So, for example, euro dollar, between last week we had Monday, Tuesday, Wednesday, Thursday, average daily range anywhere from 60 pips to 50 pips. Now we can see average daily range into the new week. We're ranging 80 pips to 95 pips, so we can see a strong influx of volume coming through. So usually when the ranges are tight, we don't want to be trading in those tight ranges. As James says, I mean, you can get chopped around pretty easy. So average daily range, paying attention to average daily range, and then also understanding that, we don't control the markets. We don't want to predict the markets either, but we want to react to what the market's doing. So instead of having the mindset of what cycle can we be in next week, having the mindset of, what cycle are we in now? What are the markets doing now? Are we ranging? Are we trending well? What does the macro look like? And then reacting to what's currently happening. So from last week, I mean, tight range, we could see the tight range just based on the average daily range, just based on how we were holding in between daily highs and lows. So in that case, I would probably hang flat or stay a little bit more cash heavy. Whereas, now we're seeing big swings, we're seeing those daily ranges expand, and that's ideal, more ideal to start looking for good moves. So that would probably be the more day trading side of things. Then I guess looking at more managing a portfolio, which is obviously a lot different because now you're exposed overnight. You can't necessarily just put a stop loss or close a trade. Now you have to think about asset allocation. You have to think about diversification. You have to think about rebalancing a portfolio. So when it comes to market cycles, I try not to over diversify. So kind of have my mind in too many different markets, and I can't really catch up with the macro. As for myself, long-term portfolio, I've got crypto. I'm not holding too many. I've got BTC, ETH, XRP, the main guys. And then when it comes to US equities, S&P 500, which are dollar cost average, and then the main tech stocks, Tesla, Amazon, Facebook.
Hunter just buys Dogecoin.
I just love Dogecoin.
You just buy Dogecoin.
I'm a fan of Doge.
I used to use Doge, man, actually, and I think I made when it ripped there a few years back. I had it at like pennies, and then I ended up selling it for like an 8 or 10x or something like that, and it went. Oh, wow. It just kept like all in one day sort of thing. It just kept.
How much if you had held like to the top? How much would you have made, like in terms of that?
I don't like to think like that. I made money.
True. Doge has range, eh? I mean, Doge can move. Yeah. I still back Doge. I back Elon. He's a fan. I mean, if you look at Tesla, I mean, Tesla's ripping almost into all-time highs. And if you watch Sky News and CNBC, I mean, these guys are bashing Elon Musk all the time. They're talking bad about like how they're blowing up Tesla showrooms and stuff. But hey, what the price action shows is different. So I wouldn't be surprised if we get a nice little run from Doge.
Every guy's got some sort of story I've heard where they're like, if I just held, I would have had 400 grand.
Oh, yeah.
It's like, I mean, yeah, if you knew the future, of course you would be rich, right? It's a silly mindset to be in, and we only can really look at, okay, exactly what you're saying, Zach, is how do we manage our risk? How do we manage our drawdown? Because that's something I've been learning is like, as my trading gets better, I'm making money, but how much what's my max drawdown, right? And, if I made 10% last month, but my max drawdown was 8%, right? I lost like $800 on the 10K account in a day, basically, right? That is super risky. You know what I mean? To risk $800 on my max trailing only to make 10%, it's like, maybe I'm not as good of a trader as I thought because I'm kind of just DCAing into things, right? On levels, and I need to practice actually becoming the trader who manages their emotions better.
No, sure, but on that, I think like if you're okay with DCAing and having a bigger drawdown, we're not a hedge fund that's trying to manage like we're not managing like a hedge fund portfolio that's too worried about that. If you got money in a trading account, you should always look at your money in a trading account as money that you can afford to lose. That's why sometimes a while ago, about 3 years ago, I used to have like quite a big personal trading account. Then I just dropped it to 10%. So let's just say I had 100 grand to trade with. I put in only 10 grand, and then I used to risk 10% per trade, but it was like risking 1% of my total portfolio because you don't know what can happen, bro. Imagine like you're in a trade and all of a sudden, you have a tilt day or whatever the hell happens, and all of a sudden you go and you mess up half of it. So
Yeah.
How's your challenge going, by the way? You up what 8%? You said.
I was my max I've had it was 16%,
Oh,
and I've
wow.
come back down a bit.
Where's most of your money come from trading it? Because I saw you were trading some individual stock names as well, right?
I was doing swing plays on the stocks and just holding the
Okay.
stocks as they came back down. I would add into them if the higher time frames, the weeklies and the monthlies were showing me good reason to be in,
Sure.
right? And then as it comes down, I DCA in, and as long as the monthly and the weekly candles are still closing good, then I'll hold that position. If the weekly candle closes poorly, we start losing some levels, I'll exit the trade. I think Netflix was one of those, for example, where it crashed down, where I had to exit. And then just simply pretty much only buying on the NASDAQ, waiting for these big retraces. So like right now, basically we've had this massive dump down. I'm adding back in, right? And then hopefully it comes back up. If not, then we're going to be in a larger drawdown. And that's how it's been going basically is you hold it, you make in and out in one day sort of thing on the NASDAQ.
Sure.
But every once in a while I'm getting like it's ticking up and then back down a bit, but it is profiting. And the way that I trade here is I think this is a very risky way to trade for a majority of traders because it's so easy to never accept a loss, right? To be down, that $800 and then be like, well, it'll be fine. I'm sure it'll come back eventually. And then eventually one day you're going to get a massive market crash and then you get the whole account, right? Because I am DCAing a decent amount. And that for myself, that makes my win rate very high, which helps my emotional state, right? But at the same time, it can be very destructive if you don't manage your emotions.
Yeah, if you let trades maybe play out overnight or something like that, you could see, you could be quite,
Maven,
do you have a rule about how many times you DCA in?
I will pretty much the very maximum amount. I'll have 3 micros. So, and that'll be like an emergency I have to get out sort of thing, right? But basically, I'll draw a zone, right? I'll buy the top of the zone and sell and buy the bottom of the zone, right? And then that way, what happens is I lower my average entry to the middle of the zone, right? The third one is only to catch a wick, and then I get out of it immediately to again lower the average entry, and then I get out so that single contract is a really good position.
Do you DCA, Zach?
I'm in DCAing not for. I've been trying the sizing in, sizing out thing on my day trading side of things with leverage. Never been good at it. At the moment, I'd rather just go in my full max risk and cut it quick if I need to. But I do DCA the S&P 500. That's kind of my little retirement annuity that I try not to touch. I know in the US, I think you guys have it a little bit different. We got something called RAs. I think you guys have, what do you guys call it there? The
401ks.
Or 401k, yeah. So DCAing just S&P 500 at the moment. But I had a question. I see a lot of the guys are asking at things about like emotions. When it comes to rules, consistency, structure, daily routine. What do you guys think about AI and the rise of AI and being able to back test strategies within a short period of time and alleviating human error? It's good for day traders. And what do you think about it in terms of the whole finance industry as itself?
Yeah, I think AI, the current state of AI is basically an amalgamation of human created ideas already. So what like Grok does, for example, is it searches the internet and finds data and then compiles it all together and gives you it's essentially a Google search in my mind, but a very compact, fast-paced Google search that summarizes everything, right? And I believe that is not actually a profitable strategy. So the current state of AI, unless it's using some sort of machine learning where it adapts itself to the actual market conditions, is completely useless, right? That being said, machine learning, I think if you have a certain set of methodologies, right, and you can use machine learning in order to be able to trade effectively and more profitable over time. But I don't think any strategy that you're going to be able to use with AI is going to be able to be effective.
Interesting. Yeah, look, as for myself, I mean, I'll be a day trader till the day I die. You know, I love the routine behind it. I love the structure. You know, it keeps me on my game. So even if I don't need the money, I'd probably still be doing it. I just love it, picking tops, bottoms, adapting with the markets. But I can agree and disagree with you. I mean, I totally agree when you mean there's no point designing a strategy and then the market conditions change next month, and now all of a sudden you've got a long bot in a short environment. And this thing's just drawing down completely. The back-tested data might show positive, but it hasn't incorporated the current macro or the current cycle that we're in. And for that case, I completely agree. I mean, there's just certain things that a bot can't do, and that's discretion. So the moment we start having AI with the discretion and with things like emotion, I think that's the time we need to be scared. But as for now, I think with the rise of AI, have you guys noticed maybe a shift in market conditions, maybe pre-AI, pre-Brexit? You know, we had this influx of retail traders coming through, this influx of like AI and bots and high-frequency bots and stuff trading. Do you think it affects the market itself?
So do you remember, James, Trader Nick was talking about this?
Yes,
actually.
you were talking about all of this stuff. Yeah.
We have a very interesting space right now where the U.S. economy is, not that great, right? So you would think gold would go up, right? And then the stock market would go down because unemployment rates are going up, inflation issues, all this jazz, right? But because the unemployment is not important anymore because of AI, these tech stocks are still soaring, right? So you have this interesting scenario where Bitcoin, gold, and the NASDAQ are absolutely pumping, not really giving you any sort of pullback. And the fear is, hey, once one block falls, the entire economy is going to crumble, right?
Yeah, no, that's true. And I think even from a case of I think the benefits, I do believe there's benefits. I think I would rather be on the right side of AI than on the wrong side, and I think something that we've been doing, being able to backtest 20 different strategies and all simultaneously and do it within the course of, a couple hours. I mean, that's massive. I know for you guys, we used to backtest back in the day, 6-7 years ago, we used to backtest strategies and we used to do it on a messy Excel spreadsheet and have to go through this tedious process. But at the moment, we've got one that we're running. It's a pretty simple strategy. It's got a decent track. 2021, we're fairly break even. But I'm pretty impressed with the way that it's mitigating risk, and I'm pretty impressed with the way it's outperforming it. I think if we can just outperform the S&P 500, we're doing something great. If you got an average investment firm, we've got like Investec, Alan Gray here in South Africa, Fidelity, whatever the case might be, chances are you can ask them for a currency and gold allocation with leverage. They probably won't have that sort of product anyway, so you could probably develop, maybe a product with gold currency exposure with leverage, have a decent strat. There is no passive income. I don't believe in passive income necessarily. You still need to work with developers. The developers still need to be on it. You still need to adapt it. You still need to log on daily to see any deviations. There's still work behind it per se. But I mean, hey, look, if you can trade 5 different markets with 5 different risk appetites all simultaneously, but why not,
Yeah, totally. And I wanted to touch a little bit deeper into the emotional side of things. As you said, there's a bunch of questions about emotions. How do you have any actionable tips that people can take away? Because everyone's like, discipline, psyche, mindset, this all jazz. This is what's restricting me, right? What sort of practices do you actually place that help you improve your awareness, your emotions, and self-control?
Yeah. James, you want to kick it off or should I kick it off?
No, you start us out. You're the guest.
James has already told his opinion many times before. We don't care about
that. My face is not on the thumbnail, Hunter.
Yeah, exactly.
That's good. No, I think, look, I'm still a youngster, I'm still going through the motions and the ebbs and flows of life. And I've got a long way to go too. So I'm nowhere near perfect. And I think that's the first thing, is just understanding that we're not going to be perfect. We're not robots. Life is going to happen. External things are going to happen. So to try and sit at the desk every single day and expect to perform at your best performance every single day is just totally unrealistic. So I think something practical that helped me was just doing a mental check in the mornings and using that as a deviance to say, okay, cool, I'm going to get to the desk, or I'm not going to get to the desk. I think something that holds traders back from consistency is the need to make money. And I've got a small community myself, and we've started to select clientele because some guys are just in the position that they could become a good day trader, and some guys are not. And the guys who aren't in a good position are typically the guys who are trying to get from 0 to 1. They've got like the scarcity of money, they don't have capital, and because of that, they're wrestling with themselves because they're not in a good position. So trading doesn't get you from 0 to 1. It gets you from 2 to 10. The guys who perform in the community are guys who, they're business owners, they've got capital, they're looking for diversification. They maybe have a portfolio, want an active side of the portfolio. They maybe want to buy back time, but they're not directly in it just solely for the money. They're looking for the location and the time freedom. So I think when it comes to like intention behind your trading, I mean, that's going to be massive depending on your performance. And then looking at things like doing a mental check in the morning. The beautiful thing about trading, it's not like a job where it doesn't matter how burnt out you are, you're going to go sit in that traffic and you're going to get to work on time. Trading is just part of it's just beautiful enough that like no one's forcing you to the desk. Trading setups are coming all the time. You're going to miss setups. You miss setups all the time. I miss setups all the time. I think just having that mindset of like realizing that you're not actually working a job, there's no one forcing you at the desk. And it was a breakthrough for me because I went to travel for the first time last year and went throughout to Asia. And that was a big breakthrough for me because now I realized that all my life I've been trading for money, but now I was actually trading for location. And that in essence helped me perform better, because now I'm enjoying my surroundings. I'm going to coffee shops. I'm getting away from the desk. Sitting at the desk is already a massive burnout, just by the way. And then also realizing that I'm trading a completely different time zone. I can more than happy wait for a setup to come to me. I've got investments that are paying me. I'm not trading to make money. I'm not getting to the desk and saying, hey, like, shit, I need to pass this account so I can pay my rent next month. Like, unfortunately, that isn't the case, and it is for many of the traders. So I think just intention behind why are you becoming a trader, realizing that it's not just for the money and that it's for location and time too. And I think everything falls into place after that. It's just a higher perspective of like what you're actually doing. That helped me.
Yeah, just to go back onto that AI topic as well. I've actually got some with Edgeful as well, Zach. Some basically backtested algos. For example, if I need to be away from the desk, it actually will send me an alert to my phone, and on some of my accounts will actually take it automatically. But if I want to take it on my prop firm challenge, I just get an alert to my phone, right to my phone, and I'm like, cool, I need to take the trade. I place it, I put my stop loss and take profit, and I'll walk away, which is pretty nice because, I think that I don't know about you, Hunter, but sometimes it can get quite tiring being on the desk all day, every day. I know you don't, but for me, I only really trade for like 3 hours max a day. I'm not trying to be on, and I think that's something that I only learned while late in my like I've been trading for 7.5 years. I know you've been trading for almost double that, probably double that, Hunter. But it took me like 6 years to realize you actually don't need to be on the desk all day, every single day.
No, it actually makes it worse, I think.
I agree, bro. Poor trading decisions after a couple hours.
I tested that theory, and I did a live stream from open to close last Friday.
Sure.
And by the end of the market, I was weird. I was loopy, man. Like I was talking shit that didn't make any sense. Maybe that's part of live streaming as well. But looking at the chart for that long is, I immediately after I passed out for 2 hours. Right?
You're tired, bro.
And what was funny is, I think I made $50. Which is more or less the same sort of thing I would have made on average if I'm just waiting for a pullback, buying it, and then letting it rip, right? One trade, all you got to do is, this is what I've kind of done, is mark up a couple levels, look for the reaction off that level and then let it ride up, right? And then target the previous sort of highs sort of thing, right? And there was no point in doing that, right? And I'm not a fan of scalping like that because I think it's you have multiple currencies, and it's not just money, right? You have your time currency, you have your sanity currency, right?
Correct.
And you're sacrificing both of those just to make maybe a little bit more money, and it doesn't really make much of a difference, honestly. Even if you do make a little bit more money. I got a question from Robbie here. You want to touch more on
that? Yeah, I mean, just to touch more on that topic as well, and maybe Zach can chime in too. But for me, I'd rather be on the desk for 2 hours a day, make or lose my money in the day, hopefully make it, and then and get off. And when you've been doing this longer, you realize that the more capital you have, you don't actually need to trade for 10 hours a trading day. It's unnecessary. I like trading the NASDAQ or S&P in the New York session, or the DAX in the London session. Like, for example, if I have a winning trade in the London session, today I had a winning trade in the first 30 minutes of being on the desk, I'll get off and I'll come back maybe and look at the US markets as well for like another hour and a half, and then I'm done, bro. Then I'm coming around doing calls like this, podcasts, getting on chat. That's the fun part actually about trading. Trading itself can sometimes be very lonely. Of course, it's nice making money, but you don't want to be staring at the charts all day, every single day,
Totally. I got a question from Robbie here. The current market conditions where pretty much everything is just sitting at all-time highs nearly every day. How do you trade that, Zach? Like, a lot of people struggle with all-time highs because they don't know what to target, I suppose.
Yeah, good question. I think having a good arsenal of products to trade in the back of your pocket is always good. I mean, as for myself, looking at things like euro dollar, pound dollar, DAX, I mean, these things are moving daily, and it's moving in ranges, and it's breaking lower and it's breaking higher. So in terms of like the currency space, it's the highest volume traded market there is. It's like a couple $1 trillion every day that's fluctuating through. So I never really get that problem in terms of the currency side of things. But I do have traders that are looking at things like NASDAQ, and maybe they don't get a setup for the last week or two because this thing's just ripping into new highs and they can't get good positions. So I think in that case, like, I used to trade predominantly pound dollar, and throughout Brexit, I mean, I was doing really well, and then market slowed down for a bit, and I had to move over to pound yen, and that started doing well for me. So I think not always focusing on one market, just keeping maybe a separate market that's kind of just like acts as a bit of diversification for your portfolio, so that when market cycles do change, and that when things do change, you're either not going on tilt because your market's not performing the way your strategy wants to, and it helps with selectivity, So when pound yen starts to range, I'll move over to DAX, and when DAX starts to range, then I'll start looking at the US markets again. So I think just having a couple markets in your playbook is always quite good.
Fair play. Cool. Do we have any more questions, James? I'm kind of
let me have a look here. Have a look in the chat. Jeez, the chat goes wild, Hunter.
Yeah, it's getting busier and busier on this.
Yeah. Okay.
How many guys are on?
Okay. Yeah. He has a good question. I saw this question from. Okay, well, it's gone there. But someone asks, how do you measure growth as a trader outside of monetary gain?
There you go. Zach, you want to take that?
It's a good one.
Yeah.
I think it's a typical thing from the beginning. If you can start grading yourself as a day trader, even when you're journaling, not focusing on grading yourself on P&L. I mean, as for myself, I can have a really good trading day, but I could be down. I could be flat on the day because I'm not grading myself on P&L. So I'm grading myself on routine. I'm grading myself on my diet. I'm grading myself on my health. I'm grading myself on my level of flow state. I'm grading myself on all the external things except my P&L. And indirectly, these things are going to benefit my P&L anyway. If you're going to be judging yourself on P&L and you're going to let that determine your emotion for the day, I mean, you're going to commit suicide eventually because you're going to be having depressed days and then you're going to be overexcited. So just to keep that equilibrium of mindset and and grading yourself. If I get good sleep, I wake up on time, I get good structure, I get to the desk, I place a trade that is perfectly part of my plan, I end up losing some money, I end up going to gym, having food when I come home. I mean, I've had a good day, so I'm not worried about P&L.
I think maybe also just to butt in there as well, I think a good way, this is for me how to answer that question, a good way to judge yourself as a growth as a trader outside of monetary gain is if you don't let losses ruin your whole week. For example, you take a loss on Monday and you come back Tuesday with a fresh mindset and you bounce back. I think that's for me was a big one because I'm a highly competitive person. I hate losing. But once I started to realize that losses are part of trading and you just got to bounce back. Unfortunately, maybe I clicked wrong or I took a shit entry or whatever it was, but you just bounce back and it's not letting it get me down. Just that I think a big thing, a part of trading is about being resilient. You're going to have, crappy days. You just got to bounce back from them.
Yeah, fair play. All right, guys, and let's just wrap that up then. Zack, where can the viewers find you?
Yeah, well, firstly, thanks for having me. If you guys want to check me out, I'm on Instagram. I've got a YouTube channel, Facebook, all basically the same name, Zack Rens, ZACK RENS. Proudly from South Africa, here with James Bruce. If you guys want to send me a DM, more than welcome. Hunter, Maven, thanks for having me, bro. It's been great being on here. Lots of good questions. I hope I managed to provide some value too. Yeah. And hopefully we do this again sometime too. Maybe jump on my side.
Yeah, totally. Yeah, shoot us a message behind the scenes, or if you have any other guests that want to jump on the podcast too, that'd be awesome. Just shoot a message. Yeah. Guys, thanks to Zack Rens. We do this every single Tuesday at 11 a.m. EST. Different guests next week, of course. 50K Maven challenge is going to be posted in the Maven Discord. You guys can see who won in there. Okay. Happy trading, guys. Thanks for joining us, Zack.
Thanks, man.